marketstrategy.com.
Hi, this is Chris again, looking at the upcoming Tuesday, August 19th trading session. In front of you is the economic calendar, and you can see right away we have the RBNZ 2-year inflation expectation number for the third quarter. This will be a localized number, though. Look for reactions in the New Zealand dollar. Better than anticipated would be good for the Kiwi dollar if you have the ability to trade that asset. After that, we have a relatively quiet session for the rest of Asia and mainland Europe, but the CPI year-over-year for the British economy comes out, anticipated 1.8 for the month of July. With that, the market should, in fact, react positively to a better than anticipated number, pushing the cable, the GBP/USD currency pair higher, as well as the FTSE, both of which have done fairly well in the last couple of days, so this could be more fuel for the fire, if you will. Looking at the calendar, you can see that really not a lot goes on until we get into the United States, where we get CPI numbers there as well. That being the case, look for 1.9 or better, or 2.0 or better. This is the ex-food and energy number. If we can get that, the S&P 500 should continue its climb higher as it reaches for 1990. On top of that, if this number comes out better than anticipated and perhaps the British numbers come out worse than anticipated, that should favor the US dollar in the British pound US dollar pair. Looking at the S&P 500, you can see we had a positive session for the day on Monday. We think this market is going to 1990 eventually anyways, so pullbacks should be buying opportunities, even on bad news. It would have to be disastrous, really, at this point to turn things back around in the S&P as far as we can see. You can see that the pound dollar did rise a little bit and then fall and then basically stabilize for the day. Look for the British economy numbers, the CPI numbers, to possibly push us to 168 if better than anticipated. If they're weaker than anticipated, we could see a little bit of a sell-off. 166.5 should be the support, though, and that being the case, we feel that the market probably moves on the number, but maybe not massively so. Looking at the euro dollar, you can see that we have in fact fallen, but we have 3 hammers in a row on the weekly, so quite frankly, we are not fans of selling this until we can get below the 133 level. We think 135 will probably be tested sooner or later, but in the meantime, we're just going to simply meander sideways. Looking at the FTSE, you can see that we rose during the course of the day again, and those British CPI numbers could push us even higher. We do like the tone of this market. A pullback's probably preferable at this point before going long, but truthfully, the FTSE looks like it's breaking out of its funk and going higher. With that, I've taken a look at the August 19th trading session.